Good afternoon. Welcome to this weekly market update presented by myself, Wichard Cilliers, and our currency strategist, Cilliers. Andre, we saw last week that the budget was perceived well by the market as Mr. Inogonagwana was speaking, but after dissecting it, the market sort of delved into it and wasn't perceived as good as it was. What is your views surrounding this?
Yes, good afternoon to everybody. Yeah, well, it's very, very simple, plain and clear. If you live above your means, then you can try and color in the picture as much as you want to. But the market will relook at what you're doing and what you're busy doing, and it will look at the graphs, it will look at how you're comparing to the rest of the world, and then if they see that you are continuously borrowing more than what your income is to cover your expenses, and you're doing so much worse than what the rest of the world is doing, then they will punish you, and they will take your currency to the cleaners and punish you in that way. The other one is once you start coloring in your book by robbing Peter to pay Paul, and then one refers to taking some of your savings money out of the gold and foreign exchange reserves that you have, and you simply really just saying that I'm paying some debt. Yes, you are saving maybe a little bit of interest, but then if you look at the history of how the government works with their fiscal situation, then you have actually no proof that they will repay that debt. And I think the market is telling us that. And if we look at the movement of the currency, then it's clear what the market thinks of people that live above their means.
Yeah, we'll delve into the currency just a little bit later on about what we think about that. But for now, some interesting data coming out of the US again. And inflation is obviously a hot topic out of the US. And their latest PCE deflated number, which is fairly actively watched by the Federal Reserve Chairman and Committee as a barometer for the inflation, is coming out on Thursday. We've been speaking about inflation for a while now. Andre, what's your take about the inflation number on Thursday?
Yes, if we look at that graph, it says core PCE seen rising 0.4% month on month in January. Now, 0.4%, if you rise by 0.4% on a month-to-month basis, and you multiply that by 12, then will roughly then give you your core PCE over a 12-month period, and that's very far away from the 2% inflation target that the Federal Reserve has got in mind. So for them, it's still an inflation battle. They're not very happy with what they're seeing, but we've spoken about shipping, we've spoken about the Middle East, we've spoken about war in ships being attacked in the Red Sea, the impact on oil prices and on shipping costs, and these things will start having an impact, and this is what's expected this week. So that will simply mean that Mr. Powell, with his rhetoric little speech every month on speaking about longer, higher rates before we actually see a decline, and that they will be data dependent, will just be confirmed by the figures that we expect this week. So I don't think it will have a fantastically dramatic impact on what the dollar will be doing in terms of moving higher or lower against other first world and emerging market countries. But it will most probably stall it for a sec and then continue, because if we go to the next graph, then is there not a graph on the higher for longer? Yes, that one. So Mr. Powell will just confirm this for us. We still expect the second half where interest rates will be cut, and that will then for this short-term period, I think everything's built in with a PCI that's expected a little bit higher. And as I say, second half of the year is still where I pencil in any interest rate decreases.
Okay, Andrew, now we're going to go back to our local currency. We just tackled the issue about the inflation data out of the US, which is quite important. But now we're going to go back to our local currency and how we can look at this current graph and how the rand has underperformed other emerging markets relative to our peers. We're in the same boat as Russia and Turkey. Two basket cases we don't want to be, actually. Just your take on the currency for conclusion for this afternoon.
Yeah, I think one must just can't even speak about being in the same boat as Russia and Turkey. Turkey has long ago left the boat. They in some inflatable somewhere in the open sea with very high inflation, a very weak currency, and a central bank that is totally erratic, and there's no distinction almost between the central bank and government. So I don't want to even speak about us being in that boat. And we definitely don't want to be in the same boat as Russia, who's constantly at war with people. But this just goes back to what we said earlier. We're underperforming all emerging markets. And we're at the bottom of the basket here. So it's not good territory to be in. We've been there for a long time. If we go back to this graph, right through to January 2023, then we can see that's where the disconnect had actually started. It's a year ago now, and over the last year, we've never been able to get ourselves back into the same territory as the Colombians and the Mexicans and the Brazils and so forth. And that's really where we want to be. But our policies, our fiscal situation, our load shedding and everything is just the reason why we are where we are. For the moment, we broke out of the 1820 range with a top of 1920, excuse me, sorry. And slightly above that, we've been almost at 1940. But that's why, because we were punished by the markets, both locally and internationally, for the budget. We have since seen that the dollar is moving closer to the 108.5 range against the euro. It was a little bit lower. So again, with that punishment, we also had a stronger dollar. We're seeing a slight reverse of the dollar. I think that might continue. And I think within the next week or so, we'll most probably be back in that 1860, 1920 range. I have no reason to believe that we should continue to be trading up at these levels. So I do think we'll see some recovery.
Andre, I just want to say thank you for that update. We'll speak to everybody again next week. Enjoy the rest of your week. Cheers.
Thank you, Wichard. Go well.